So limited liability company is a type of corporate vehicle usually used for business, but not only. That basically compared to other type of legal entities, for example, a sole proprietorship or a partnership, has two potential advantage. On one hand, it segregates the personal assets of the owner of the business from the assets of the company. So this is an advantage in the sense that, for example, if you register a sole proprietorship to own, for example, a shop or a restaurant, and if you have any creditors, for example, the bank to which you requested a loan, the bank, in case you don't repay your loan, will be able to seize your personal assets. That is to say, not only, for example, your restaurant, the tables, the chairs, and so on, but also, for example, your house, your car, and so on. In the case of a limited liability company, the main advantage is that your personal assets are not the assets of the company. So the bank will be able to claim, once again, the assets of the restaurant, of the business, but you will enjoy limited liability on your personal assets. So that's the main advantage of registering a company compared to the type of structure. Another advantage is that a company is an entity that's recognized for tax. That is to say that the income that receives the company is not, and that is not distributed to you as dividends or as salary, is taxable at the company level, but not usually, there are some exceptions, at the level of the shareholder. So concretely, this advantage, for example, if you have a large business operation, usually you will prefer for that to be channeled via a company because the corporate income tax rate that you will pay will be lower than what you would pay if you were taxed at progressive personal income tax that are usually higher than corporate income tax. LLC is a type of legal entity, separate from its shareholders, directors, and so on. In the case of a branch is the same legal entity as the entity that's registering it. So let me give you an example for that to be simple to understand. Let's say that, for example, you own a restaurant in Paris. You can decide to start basically a chain and open a branch of your restaurant in another city, for example, in France, Marseille or Strasbourg, or in Singapore. It will still be the same legal entity, the same business. If you register, so that's a branch. If you now register a subsidiary, you're registering a separate company, distinct from your restaurant in Paris. So restaurant in Paris could be the shareholder of that new company in Singapore or in Marseille, but these are two separate companies. So that depends a little bit on the business plan of the client. Usually, it's better to register a subsidiary because, once again, the main advantage of that structure compared to a branch is that you segregate basically your different activities in two separate legal entities, which means that, for example, if your restaurant in Singapore collapse because you have no customer, and that your restaurant in Singapore had, for example, a loan with a bank in Singapore, the bank in Singapore will be able to seize the assets of your restaurant in Singapore, but will not be able to reach the restaurant that you have in France. So that's the standard case. There's however some exceptions where it can be advantageous to register a branch. That's usually going to be the case in regulated industries, for example, banking, insurance, some financial activities, where the registration of a branch is seen as more positively than if you're registering a subsidiary, and we also have some advantage from business setup requirements. For example, for banking, you usually need high amount of paid up capital. If you register a branch, you can use the capital, some or all of the capital of your existing bank to register the new bank branch overseas. Well, so as I said, it's usually gonna be the subsidiary. But in some countries, once again, there's exception in some countries. Countries that usually require you to inject the paid-up capital before incorporation of the company. So these countries include France, Belgium, I believe Germany, a few others. In these countries, you need to open a capital account with a bank or go via a notary. And if the shareholders are overseas, it's usually very time-consuming for the bank to release capital account numbers. In such case, you may want to register a branch because the branch doesn't have that capitalization requirement that needs to be completed before registration. So this also will depend on the country and on local tax regulations, but very often in many countries, not all, for example, Singapore is not in that case, locally incorporated companies are taxable on their worldwide income. Whereas a branch is usually taxable only on its locally sourced income. So for example, if you register a branch in Singapore, the branch will only be taxable on the income generated by your activities taking place in Singapore. That is to say, the sales closed by your Singapore staff and so on, but not on the economic activities that, for example, will be taking place in France, if that's where your company is from. We hope that this video will be informative for clients who are hesitating between the two types of structure. As you see, it's a case-by-case basis. So what we suggest is to contact us if you want for your specific business to have more information on what type of legal entity that you need to register. Also, if you enjoy this video, feel free to like it on our YouTube channel and to subscribe. Thank you.